Ladies and gentlemen, how do we know whether the 4-year cycle is broken and not? There is only one way to know that. And we'll look into the charts, we'll look into the other trends that exist, the trends like this big long-term channel formation on the logarithmic chart based on angles. We'll look into the down-sloping resistance line on the monthly chart RSI, which has marked all Bitcoin's tops historically. We'll look into the 5.3 Bitcoin theory, which is now debunked, but there's a lot to actually do a post-mortem on there and extract information from. And we'll look into one singular existing trend with the 200 SMA in relation to Bitcoin's all-time highs, which actually does predict that the 4-year cycle will break, and whether that will hold true or not. I am a believer in the 4-year cycle. I do believe that as the trend is your friend until it ends. I think that's the framework in which we should be working with. I think that's the framework that makes most sense. And I'm going to justify that framework in this video, but also look into alternative scenarios and highlight how we would know if the 4-year cycle is broken so we don't end up in a situation where we get trapped in assets. This is a very important thing to do, and I highly suggest you stick around. I've got something for you guys before we dive into it. A 20-second discussion here of the Bitunix Exchange. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global, it's non-KYC, it's never been hacked before, it's got all the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers. Just want to mention before we dive into the topic today, the short-term charts on Bitcoin and Ethereum have bounced upwards a little bit, but I don't see any justification to make a new video there. I don't think the changes have been big enough for some new analysis. So we'll wait till tomorrow. We'll give the charts some more time to develop, and then of course we'll discuss it then. So there have been many price-based trends in Bitcoin's history that have existed. Some of them have broken, some of them are still holding. One of them that is still holding is this logarithmic channel based on angles. From peak to peak and from trough to trough, what we see is the angle of ascension between those peaks, between those troughs, halves each time. Now you can see I'm circling the numbers here. You can do the calculations, basically halving each time. I could make it even more precise if I zoomed in and draw the lines more correctly. But the fact of the matter is the angle of ascension between the 2013 cycle and the 2017 cycle is double the angle of ascension between the 2017 cycle and the 2021 cycle, and extrapolating that trend forward, this angle should be half the prior angle as well. Working under that assumption, the top of this bull market should be within this channel as we touch the top of this channel around the cyclical deadline, which is later this year, looking at about October, and we'll discuss that more in a second as well. That's a separate topic. Now, some people who aren't too knowledgeable about the 4-year cycle might think that this is the 4-year cycle. Well, it's not. If this channel breaks to the upside, that has absolutely nothing to do with the 4-year cycle. That would suggest a very powerful move coming, a parabolic move coming within the 4-year cycle, but assuming we are still before the cyclical deadline of later this year, that powerful move would still be entailed within the cycle, right? Nothing to do with price is part of the 4-year cycle. The 4-year cycle is purely based on dates. We can go further with this. We can look at something like the RSI. So the RSI is not really a price chart indicator. It's more of a momentum indicator. And what we see is that there's an angle, there's a line here, of resistance that has marked every single peak in Bitcoin's bull markets, even the 2011 peak, 2013 peak, before the first cyclical top. So every major peak we see is marked by this resistance line on the RSI. And so hypothetically, if we got to this resistance line again, that should be Bitcoin's bull market top. But again, this line, although it is in conjunction and has acted with the 4-year cycle historically, just like this channel, it's so far worked with the 4-year cycle, it is not to be mistaken with the 4-year cycle itself, because it is basically a price chart indicator. If we reached this line for resistance and Bitcoin seemed to have topped out, but then went even higher and topped out with the regular cycle and broke this line, that wouldn't mean that the cycle is broken or changed in any way. It just means that this line has stopped correlating with the 4-year cycle, because it's not actually part of it, right? It's merely just acting parallel to it. historically speaking, even the 5.3 Bitcoin theory was, again, acting parallel to the 4-year cycle. A very strong trend that people like Crypto Crew University publicly said would break the 4-year cycle. He was obviously brutally wrong, and I made 3 or 4 videos actually in leading up to that saying he was wrong. They were literally called Crypto Crew University Debunked. And of course, I got a lot of hate for that, but it turns out I was correct. What is the 5.3 theory? Well, it was a very strong mathematical theory. And basically what it was, if we took the angle or the number, the percentage gain between the bear market lows and the bull market top, for example, that was around 60,000, 62,000. So we take that 62,000 number and we divide it by 5.3. What we get is 11,000 and something. And you can see in the next bear market to bull market, the gain was around 11,000. Again, if I did those numbers completely correctly, it would line up completely correctly. Let's just take that, let's just say that 12,000 number, take the median there, divide it by 5.3. What we see is 2,200. And again, that is the pretty much exact gain of the following cycle. And if we take that 2,200 number, divide it by 5.3, Bitcoin should have topped out 427% from the low, which would have put us at around 83,000, right? That's where people were saying we're going to top out based on this mathematical formula, which seems to be very precise and reliable, right? But of course, this was merely a trend, just like this trend here on the RSI, just like this channel over here. It was merely a trend that was acting parallel to the 4-year cycle and was inherently unsustainable. All price chart trends are inherently unsustainable because they take into account diminishing returns, and eventually the returns diminish too much to the point in which Bitcoin is unable to grow if it keeps following that trend, and it has to break it, right? A 427% gain from the bear market low to the bull market top was merely a return that was too diminished and not taking full account into Bitcoin's strength. Bitcoin was stronger than that, and hence it went higher to that. That is why the 4-year cycle is so powerful. That is why I continue to stick to it cycle after cycle, and I continue to ignore mostly these price chart trends unless they offer any significant independent evidence. Because price chart trends are inherently unsustainable. They cannot be sustained forever. The 4-year cycle is a date range trend. It does not run into the problem of price chart trends, which is diminishing returns over time, leading to a return that is just inherently incompatible with the strength of the market. The 4-year cycle, instead being based on dates, has none of those restrictions. And the date range trends are inherently independently verifiable because it's not just one big trend, the 4-year cycle. It's actually an umbrella term for many micro trends which point to similar dates for tops and bottoms. And this cycle, the date we're looking at is around October. So looking at these price chart trends, which historically have been relatively accurate, but again, they're unsustainable. Eventually they do break, and there's nothing really saying that the ones that are currently holding, like this channel and like this RSI line here, there's nothing really saying that they will hold this time either. We just have to play it by ear, basically. The reason why these price chart trends are useful is because we can use Bitcoin's 4-year cycle date deadline, which is October, and we can see, okay, if we are in October and we are testing this resistance line right here, then it becomes likely the top is in. Because this resistance line, although not independently strong evidence, is strong evidence in relation to the cycle because it is so far acted parallel to the cycle. And so if we have top flags on the price chart, like this resistance line over here being triggered, like this channel being tested for the top at the cyclical deadline, then it becomes incredibly likely that the top is in. It does become incredibly likely that the 4-year cycle will hold. But if we tested this monthly chart resistance line tomorrow, 4 months outside of the 4-year cycle's expected top, it wouldn't really mean much to me. I wouldn't actually be selling anything. Be getting a little cautious, sure, but I wouldn't see it as a bear market top indicator. So we've got 2 questions to answer then in that case. One of them is, what would break the 4-year cycle? And the other one is there evidence that the 4-year cycle will break this time? All right, so the first question, what would break the 4-year cycle? Very simple answer. Seeing as it is a date range trend, it can only be invalidated by dates. So if Bitcoin showed strong evidence right here of a decisive macro breakdown, we dropped downwards to 70,000 and kept going downwards, that would give us evidence to assume that the top was actually back here in May, and that's obviously significantly earlier than the 4-year cycle expects, and therefore the 4-year cycle is probably invalidated in total. Alternatively, if the top extends, if the bull market extends way past the cyclical deadline of October, and we're still running into January or February, that would be an extension of the 4-year cycle, and hence we can probably start to disregard these date range trends, right? Those are the only things that would actually break the 4-year cycle. So let's be really precise here. There is a little bit of room for error with the 4-year cycle. We can see, for example, this red micro trend here, which is color-coded, and you can see the date range trend where I'm circling on 2 occasions. 1,470 days it took from top to top in 2013 to 2017. In the following cycle, it took 1,435. So there was basically a 35-day room for error. And if we're assuming, again, there's around a 30-day room for error, it could be anywhere from late October to late September. November to late September. That 2-month period there. That's why I'm saying late October is most likely, because it's the median, it's the middle of those 2 points. But realistically, anything from September to November makes sense. If we start running into late December or certainly 2026, that's when we start saying, okay, the 4-year cycle is not working this time. But literally, we can go to any price. Doesn't matter what the price is, it's all about the dates. So the following question is there any evidence suggesting the 4-year cycle will break this time? Well, obviously, there's a lot of speculative, I wouldn't even call it the evidence really, theories. Oh, we're going to go to war, there's going to be a war, there's going to be a pandemic, there's going to be this happen, this is Trump's going to do this and this. That's all speculation. I don't pay any attention to any of that, because obviously there's speculation in every cycle. There was speculation last cycle that the pandemic would ruin everything. There was speculation the cycle before that, the cycle before that, okay? The fact of the matter is speculation, theories are theories, they're not evidence, they're not facts, and until they're actually validated by price action or structural changes, they mean absolutely nothing. That doesn't mean you shouldn't watch the news. It just means you shouldn't get caught up in things that haven't actually had effects on the price chart yet, right? If there was going to be a massive war, it's quite arrogant to assume that you would be able to predict that, first and foremost. Second of all, leading up to that war, and as that war is triggered, there would be dramatic results in the charts, and hence relying on the charts and cutting out the middleman entirely would be your best move as an analyst, right? You are an analyst of the charts. You are not a geopolitical expert with a sub-degree in finance, right? This is not a rational way to analyze the markets. Sentiment shifts as global events occurs, and sentiment shifts have effects on the charts. Okay, if the sentiment does not shift leading up to a supposed black swan event, then it is that. It is a black swan event. And a black swan event is inherently, by definition, mostly unpredictable. So you are gambling if that's the way you are assessing the market and reacting with your investment decisions. So what is the actual chart evidence that the 4-year cycle could break? Well, one of the biggest things I can find is this trend right here. It's to do with the 200 simple moving average. Basically, every time the 200 simple moving averages average crosses the prior all-time high, we mark the top of the cycle we are currently in. So you can see this red line here is the prior all-time high. When the 200 moving average crossed that prior all-time high, it pretty much marked the top of the following cycle. We can go ahead and just extrapolate this trend forward a couple of times. It's happened twice now. Okay, so it's not exactly a major thing. Obviously 3 times a charm when it comes to trends, but it is relatively convincing. I mean, 2 times, it would be a bit of a stretch for that to be a coincidence, I suppose. But again, the 4-year cycle is based on one thing, dates. And the fact that it's based on dates means it's very difficult to really put together an argument that it's going to be invalidated based on price, momentum indicators, or moving averages. But it's definitely something to watch. When would the 200 SMA break above our prior all-time high? Well, at its current trajectory, we're probably looking at March 2026, something like that. If we do spike upwards, maybe a bit earlier, maybe late this year or December, January. But it would be a little bit after the 4-year cycle cyclical deadline, not dramatically. But this chart and this trend does seem to suggest that we might be breaking the 4-year cycle. But again, 4-year cycle is not based on price. It's not based on moving averages. It's not based on momentum indicators. It's based only on dates. And so it's kind of weird to assume that it could be broken by anything but dates. So I'll be keeping an eye on this, but I won't be taking it too seriously until I see independent evidence that the cycle is wavering. And that evidence would come from Bitcoin running into 2026 or Bitcoin seeming to have topped quite early. So I hope this has cleared up quite a bit about the cycle. There's a lot of misconceptions about the cycle. People seem to confuse the cycle with many things, speaking about things like early top, late top, and then also assuming the cycle will somehow survive that. No, that's not how the cycle works. It's very concrete. It can morph and change over time, but over time, I'm talking decades, right? It can't change dramatically in just one cycle. It either holds or it breaks, right? And if there's a slight deviation, perhaps we can work with that. We'd have to do a post-mortem on that deviation in hindsight, but we just don't have that data yet. So guys, thank you for watching. I hope you enjoyed the video. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global, it's non-KYC, it's never been hacked before, it's got all the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.